Ever look back on your financial choices in your 40s and wish you'd saved more, invested sooner, or avoided that lifestyle creep? You're not alone. Many mid-career professionals feel trapped by those regrets, like delaying retirement planning or accumulating high-interest debt. But here's the good news. Those mistakes can become your greatest comebacks with the right strategies. In this video, we'll uncover how to turn them around and start building real wealth today. Let's dive deeper. Imagine turning a late start into a comfortable retirement by leveraging compound interest and catch-up contributions. We'll explore real scenarios where professionals in their 40s and 50s have reversed overspending by adopting smart budgeting tools, freeing up thousands for investments. Hear about debt turnaround stories where high-interest burdens were slashed through strategic payoffs, leading to financial freedom. This isn't just theory, it's actionable advice drawn from experts and everyday successes. Whether you're dealing with regret over missed investment opportunities or unchecked expenses, we'll provide step-by-step guidance to rebuild confidence and security. By the end, you'll have a clear roadmap to transform past errors into future wins, ensuring your mid-career phase becomes your most prosperous. Stay tuned as we break it all down, starting with the top regrets and how to conquer them one by one. Hi, welcome to Smart Sense. In this channel, we talk about personal finance for mid-career professionals over 40. This is for people who think they've missed the financial bus. We're here to show you it's never too late to hop on and accelerate toward wealth. Mid-career professionals often share common regrets that can derail financial security, but recognizing them is the first step to recovery. The top 3 include delaying retirement savings, where many wish they'd started earlier, but with 20 to 30 years left until retirement at age 67 for Social Security full benefits, you can still harness compound interest. Investing $500 monthly at the S&P 500's historical 10% average return could grow to over $300,000 by 65. Overspending on lifestyle upgrades is another pitfall, as rising salaries lead to unnecessary expenses that could be redirected to high-yield savings at 4.5% APY or debt payoff. Finally, ignoring debt accumulation, especially high-interest credit cards averaging 21.16% APR in 2025, compounds negatively, but strategies like consolidation can reverse this. These regrets are common, but they're not permanent. With awareness, you can pivot and thrive. Let's expand on this. Delaying savings often stems from early career priorities like family or education costs, but starting now means you can still benefit from decades of growth. For instance, consistent contributions to a Roth IRA or 401k can multiply through tax advantages. Overspending, fueled by societal pressures, can be curbed by mindful spending habits, turning potential losses into gains. Debt ignorance might arise from unexpected life events, but proactive management like balance transfers can save fortunes in interest. Real people have overcome these by seeking financial counseling or using apps for tracking, proving that mid-career is prime time for correction. Embrace this knowledge to avoid pitfalls and set a strong foundation for the future. Delayed savings is a frequent regret, but 2025 rules under Secure 2.0 make catching up easier than ever. Prioritize maxing catch-up contributions, $7,500 extra to your 401k for those 50 plus, jumping to $11,250 for ages 60 to 63, on top of the $23,500 base limit. IRAs allow $1,000 more on the $7,000 base. This can supercharge your nest egg. For example, adding these to index funds with 10% historical returns could add hundreds of thousands by retirement. Don't forget employer matches, often 50 to 100% of contributions up to 6% of salary, essentially doubling your input. Start by reviewing your plan and automating increases. Even small boosts now leverage your peak earnings for massive growth later, turning regret into a powerful comeback story. To go further, consider consulting a financial advisor to personalize your strategy, factoring in your current assets, expected Social Security, and risk tolerance. For those starting late, focus on aggressive but diversified investing, perhaps 70 to 80% in stocks if you're comfortable with volatility. Track progress with apps like Personal Capital, and remember, consistency beats perfection. Many in their 40s have built 7-figure retirements this way, proving it's possible. Avoid common traps like withdrawing early, which incurs penalties, and instead build an emergency fund first to protect your savings. With these steps, you'll not only catch up but potentially surpass early starters through disciplined action in your high-earning years. Overspending often stems from lifestyle creep, but reclaiming control is straightforward. Begin by tracking every expense for a month using apps like Mint or YNAB, categorizing into needs, 50%, wants, 30%, and savings, debt, 20%. This reveals hidden leaks like subscriptions or dining out that add up to thousands yearly. Cut painlessly by negotiating bills, switching to cheaper alternatives, or setting no-spend challenges. Redirect savings to high-yield accounts at up to 5% APY in 2025, where $5,000 grows $250 annually risk-free. Over time, this builds habits that align spending with goals, preventing future regrets and accelerating wealth building in your prime earning years. Expand your approach by setting specific targets, like reducing dining out by 50% and reallocating to a vacation fund that also serves as motivation. Understand psychological triggers, such as emotional spending, and replace them with alternatives like free hobbies. For families, involve everyone in budgeting to foster collective responsibility. Monitor inflation's impact on costs and adjust accordingly, perhaps by bulk buying or seeking promotions. Success stories abound. Professionals have saved $10,000 plus yearly by these methods, channeling it into investments that compound. Combine with income boosts, like side gigs, to amplify effects. Ultimately, this shift not only curbs regrets but cultivates financial mindfulness, ensuring your salary works for you, not against you, paving the way for a regret-free future. Debt regrets can feel overwhelming, but systematic payoff turns the tide. Focus on high-interest debts first, like credit cards at average 21.16% APR, using the avalanche method to minimize interest costs. Pay minimums on low-rate debts while aggressing the highest. For example, $10,000 at 21% could cost $5,000 plus in interest over 5 years if minimum paid, but extra $200 per month clears it in 2 years, saving thousands. Consider consolidation loans at lower rates or balance transfers with 0% intro periods. Build credit by paying on time, aiming for scores above 700 for better terms. This not only erases regret but frees cash for investing, setting a foundation for financial freedom. To enhance your strategy, create a debt payoff timeline with milestones to stay motivated. Avoid new debt by using cash for purchases and building a buffer fund. Seek support from communities or apps that gamify progress. Real turnarounds include those who cut debt in half within a year through side income dedicated solely to payoffs. Factor in tax implications, like deductible student loan interest. If overwhelmed, professional help from certified counselors can negotiate terms. Remember, good debt like mortgages at low rates can be managed differently. By tackling this head-on, you'll reduce stress, improve credit, and redirect funds to wealth building, transforming a common regret into a story of resilience and smart recovery. Investment regrets, like missing opportunities or bad picks, are common but fixable with education. Begin by learning basics. Diversify into low-cost S&P 500 index funds with historical 10% annual returns, rather than stock picking. Avoid timing the market, which often leads to losses. Instead, use dollar-cost averaging to buy regularly. If past losses sting, harvest them for tax benefits. For mid-lifers, allocate based on risk tolerance, 60% stocks, 40% bonds. Resources like Vanguard or Fidelity offer free tools. Turning these lessons into action builds confidence and a portfolio that grows steadily toward retirement. Deepen your knowledge by reading classics like The Intelligent Investor, or listening to podcasts such as Planet Money. Simulate scenarios with online calculators to understand potential outcomes. Avoid emotional decisions by setting rules, like rebalancing annually. Success examples include late starters who achieved financial independence through consistent ETF investing. Consider ESG funds if values align. Monitor fees, as even 1% can eat 30% of returns over decades. Integrate with overall planning, like using investments to hedge inflation. By applying these, you'll mitigate risks, capitalize on growth, and turn past missteps into informed strategies that secure your future, proving that experience, even negative, is a valuable asset in building wealth. To overcome regrets, establish strong habits today with SMART goals: specific, measurable, achievable, relevant, time-bound. Like saving $10,000 in a year. Automate everything. Payroll deductions to 401ks, transfers to high-yield savings at 4.5% APY, and bill payments to avoid late fees. Review finances monthly, adjusting for life changes. Join communities like Reddit's Personal Finance for support. These practices prevent new regrets, turning past lessons into a disciplined approach that accelerates wealth in your 40s and beyond, leading to a secure future. Enhance this by incorporating habit stacking, like reviewing budgets during coffee breaks. Use visualization techniques to stay motivated toward goals. Track net worth quarterly to see progress holistically. Learn from behavioral finance to counter biases like loss aversion. Inspirational stories. Many have doubled savings rates through automation alone. Diversify habits to include health and career growth, as they impact finances. If slips occur, analyze without judgment and reset. Over time, these compound like investments, creating a robust financial ecosystem. By embedding them now, you'll not only erase regrets but create a legacy of stability, empowering you to enjoy life fully while preparing for retirement with confidence and peace of mind. Thanks for watching this video on turning financial regrets into comebacks. We've covered the top regrets for mid-career pros and provided actionable strategies to overcome them, from catch-up savings to debt management and habit building. Download your free self-reflection worksheet below to assess your own situation and start implementing these tips today. Share your own regrets and wins in the comments. We'd love to hear from you.